Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the pattern levels, analysis or any rated items on these, my charts. This is all my own original work, as I think you deserve to have that. So with that, New York coffee. We can easily see from the recent action that yet again the higher 429.5 from February this year has capped the rise in September, and I would also say October, as it did back in early March and late April. So what can we now expect from the market? Well, the lows in September ended up being just ahead of the key 50% Fibonacci line for the important November 24 to February 25 move at 335.15. And back then, it had pierced, but not broken, but the unbroken assistance of the medium moving average, currently at 346.95, as well as the green short medium moving average, currently at 374.90. Today we are trying to be over both. Though in the case of the green short medium moving average, we are just underneath it, as last Thursday and Friday was spent for a large amount of time piercing and being below it. We seem to have built a small base since late September on the very slowly rising gold long moving average, which is currently at 359.60, after pushing up through it in late September when it earlier was acting as a cap. All these actions left us with a number of interesting situations. Thus I drew 6 weeks ago the beginnings of an August to late September bullish Andrews pitchfork, but then in late October that didn't fit, neither did a bearish mid-September to late October Andrews pitchfork, such that I finessed the bearish Andrews into a dark blue bearish mid-September to late October and shift pitchfork, which does fit, for now at least, and which you can see on my daily chart. In this, the market is closer to the slowly declining dark blue middle time, currently at 365.85. Right now, the market has also to deal with the green short medium moving average, currently at 374.90, which you can see eroded the dip on a closing basis, and of course a little lower than that ever so slowly rising gold long moving average. Finally, there is something else I'd like to look at here, and for this I am indebted to Ray Bradbury for asking me about New York coffee 33 weeks ago, and I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025 when I earlier reviewed the longer term charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom, with a bright red neckline on my chart, currently at 276.65, my monthly chart. The break higher over this neckline reached its primary target on the upside, but there was a secondary much harder to reach target up in the 433.35 area. What was interesting about this secondary target was that nearby to that higher level was the next 100% projected Fibonacci line at 433.75, quite close in the scheme of things. Prices did indeed turn lower up at this key combination of the 100% projected Fibonacci line and the target at 433.35, dropping down through and closing below the important 50% projected Fibonacci line at 347.20 and below the high of May 2011 at 308.90. However, in July and again in August, the market started to form a base on top of the bright red neckline. August, with its monthly key reversal up, raced all the way upwards, and we saw an extension to that move up in early September, but not reaching quite as high as we saw back in February, before dropping lower and setting up September as a monthly bearish harami. However, since then, we have not carried on lower, at least not in October, as there we ended up with a combined bullish piercing line pattern and bullish double after September's bearish harami. And right now, well, November is looking like an indecisive doji cross, possibly a spinning top at the moment. Now, we have congestion between 371.25 and 375.75, or roughly where we are now. We possibly have further resistance up at the old broken upper time, which is currently at 394.55 over the former 2019 to 2023 bullish Andrews pitch hook. I personally don't favour this resistance much, though we had stopped there in August on a closing basis. I've also drawn a new quite steep, especially for a bullish shift pitch hook, a quite steep action for the October 23 to August 25 move. Here we are quite close to the middle time, which is currently at 389.05. I don't favour this one much, but it is still nevertheless still there. Meanwhile, on the downside, the real key will be the bright red neckline below. However, the old 50% projected Fibonacci line at 347.20 looks interesting. I should point out one more final feature on this longer term chart. The possibility that we may form a very large bullish halfway hesitation or a possible double top, with all the contrary implications both those patterns may have. I will not discuss this last point any further, as it is way too early to isolate which will be which. But in all this, I ask you, please remember, these are here on this monthly chart, longer term, in some cases very long term patterns. London coffee. 28 weeks ago, I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49 sitting above." End of quote. The overhang of bearish pressure and ammunition is important, as it started back then to press, heightening the brakes lower. The rise since early August pushed up through some significant resistances, now turned into supports. And more so, these are some keen at the time and relative close to the market supports, notably the trio of interesting 50% Fibonacci lines, from November 21 to February 25 move at 38.08, the May 21 to February 25 move at 36.49, and the March 20 to February 25 move at 34.81. Then there's the congestion of the 61.8% Fibonacci lines at 41.68, 41.87 and 42.90, and the interesting 50% Fibonacci line for the February to July move at 45.05, which again features as resistance. Thus, most of these are now back to being supports, as is especially the very slowly rising mauve medium moving average, which is currently at 41.24. Now, if we look higher, we have some former resistances that are once again, we have former supports that are now once again resistances, notably the gradually dipping gold long moving average. And that's currently at 45.84, which eroded a lot the bullish incentive back in late August, mid-September, late October, and especially early to mid-November. Last week, prices turned on the downside, and one has to give credit for this to the most important of all the resistances, which was and still is the capping dark blue February to date downtrend, currently at 46.18. This caused a lower second high in mid-September when compared to the late August high, and even lower high, though not by much, in late October, and again 2 weeks ago. Thus, I cannot overstate the importance of this downtrend. At the same time, I should also mention something else that in its time was interesting and proved to be crucial, and that was the lesser Fibonacci line at 48.22. This capped the rise in early November, as it did in late October, in September, and I suppose also in August. As it did, all these capping actions initially prompted me to draw a July to late September bullish shift pitch hook, which failed last week, and at the same time I drew a speculative late August to late October bearish Andrews pitch hook, which wasn't a good fit. So I've settled on what you can see on my daily chart, a shallow, bright red, late August to late October bearish shift pitch hook. The market today has been either side of the bright red middle time, which is currently at 43.33, with being just above it right now. Finally, for your guidance, there was no weekly key reversal here last week as the one we saw in New York coffee.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.